Hello, I'm Dan Barnes and welcome to ActivTrades News. Today we're going to be talking about the Federal Reserve rate hike, the VW emissions scandal and the plunging oil price. First of all, we have to ask the question of the Federal Reserve. If emerging markets turbulence trigger them to put off a rate hike last time in September, is there the possibility that come October or December, when they may next make a decision, the same events will occur as a result of them being about to make a rate hike? Have they set themselves a recurring trap in pulling back from that hike in September? Secondly, we're going to be talking about the VW emissions scandal. The car manufacturer has admitted that 11 million vehicles, including 500,000 in the US, have been set up with software that allow them to pass emissions tests when they shouldn't have. This has significant implications for the German economy and for the European car industry more broadly. 1 in 7 jobs in Germany is tied directly or indirectly to the car industry. And of course, Germany being the engine room of the Eurozone, any impact on its economy and the Made in Germany brand could have a significant impact for the rest of Europe's economy. And finally, we'll be talking about oil price. A recent study by an energy consultancy suggested that $1.5 trillion worth of investment could be rendered uneconomic with oil at around $47, $48 a barrel. According to that study, $220 billion worth of investment has already been pulled, and assuming that oil does stay below $50 a barrel, in the US we're likely to see production fall below 9 million barrels a day. We're going to be talking about the implications that has for the currency markets, for the dollar of course in particular. I'm now joined by Vikesh Purohit, who's an FX expert at ActivTrades and works on the German desk amongst other functions. So Vikesh, looking what's happening with the US Federal Reserve at the moment, do you think that emerging market risk is, which appeared to delay the decision in Q3, do you think that's going to disappear in Q4?
I don't think it will disappear, but depending on how the markets in America develop, how the economy develops regarding unemployment rates and the target of the inflation rate at 2%, I think that will be the major part in deciding if they should hike the interest rates or not.
Okay. And does that mean they should ignore short-term risk?
They shouldn't ignore it, but at the same time, they don't have a choice to ignore it just because it's the level of what do they depend on now. Is it looking outside, what's happening outside in the market, or looking at their own economy and pushing their country rather forward rather than going back?
Okay. And do you think that have they substituted forward guidance with a sort of plan for data dependency?
I think they have, yes. They're rather just trying to see what's happening there than going through the data. Which they have, which is out there, which you can see then the effects that it has with not changing the rates, for example, the volatility that is in the markets.
Okay. And what does this mean for the Federal Reserve's credibility?
Well, if they don't change it, they lose credibility, that's for sure, because everyone's going to turn around and say, well, why? Why are you not just pushing it? Why are you not just taking the risk and pushing your economy rather than why are you still looking outside?
Yes.
Go for what is in the country rather than looking outside and see what's going on there.
So it might look like they've got something to hide if they don't make a hike.
Exactly.
Okay. And is there a risk that if they do make a call on it, they could potentially have to reverse that?
I don't think so. The effects might be there in emerging markets, for example, they suffer a bit, but at the same time, I don't think they would have to reverse their decision. They could push forward, but they need to start now, sooner rather than later, because if it's too late, then it might be worse to then push it forward again.
Sure. And what does this then mean for FX markets?
Well, if they increase the rates, obviously the value of the dollar will rise as countries will rather invest money in the US rather than in the emerging markets because of the high value of the dollar.
Yeah.
Therefore, all the other currencies might look a bit towards the down end. And for the dollar itself, might be a good bet, which might be a good bet for the euro.
Yes.
But in the long run, let's see how that goes.
Yes, well, I mean, talking about the euro, we've got the VW emissions scandal at the moment. Do you think that there is a risk that this scandal is going to expand out to the wider car industry, to other manufacturers perhaps?
Oh, definitely, because VW, one of the biggest car makers, owns not only VW brand itself, but it's got Audi under its belt, you've got Bugatti, you've got Lamborghini, you've got smaller cars like Skoda under its belt, and yesterday 11 million Audi cars have been pulled back, have been in the middle of things as well. So yeah, it will branch out. It will affect probably most of the German cars. So BMW, Mercedes might be affected. The whole economy is affected of it, not just the car industry.
Yeah, and I think there's a potential threat to the Made in Germany brand.
Yeah, probably more to the cars than anything else, however, because it's the car brand, that the cars itself, the production, everything that has been branded as a liar, basically, so to speak. It won't affect the Made in Germany brand, but it will affect the economy inside, because obviously it's not just the car industry that will suffer, or the part makers, Bosch, for example, who were the ones pointed this situation out to VW initially. Yeah, they will suffer because they supply to all the car companies with parts, and so it's going to be a vicious circle, and everyone's going to be kind of affected. Not the brand itself, the Made in Germany, but inside the country, they will have some effects. Yes.
And for the car industry, there's potentially then a push away from diesel cars into things like hybrid cars.
They need to now, obviously, because it shows that the data was not real. They are not efficient enough. There is too much pollution to the diesel cars, therefore moving away from that and then investing money in new research for hybrid cars and everything. But having said that, some companies are built on just diesel cars. So what happens to them, that needs to be seen in the future.
And you know, Germany is very much the financial hub of the Eurozone. What does this mean for the euro and for other currencies?
Well, as I said earlier regarding the US, so depending on what happens in America, it will obviously affect what happens in the Eurozone. For now, it seems steady, but it has to be seen how big the scandal actually is. If it's being compared with the LIBOR scam that we had in the UK, and if it's something similar to that, it might affect the euro pretty much.
Okay. Now looking at the dollar, we've got the plunging oil price and a massive hit on some of the countries that are dependent on the transport and the production of oil. Do you expect there is going to be any rebalancing of that market?
I don't think it will. To be fair, I'm looking at the statistics right now. There is between 1 and 2 million overproduction each day of oil. 1 to 2 million barrels of oil production every day. So, which is excess, and they still keep on selling. They still keep on pushing it. So, and with China's demand going down, and them being the second largest consumer of oil, and with America still drilling on their side and not importing any oil, it is going to have a severe effect. And on the long run, till maybe next year, you will see that oil price might even fall further down than it is already. Yeah,
there's a lot of talk of that. Yeah. So for oil-based economies, whether they're producers or transporters, where do you see distress increasing and by how much?
I can't tell you by how much, but definitely what I can say is countries like Nigeria and Venezuela, who are very dependent on their oil exports and the price being right for them to make some money out of it, they're going to suffer the most. They've even asked the OPEC to actually have a meeting before the annual meet in December and trying to discuss what the next steps would be. But the OPEC is saying we're happy to do what we're doing right now, and we are not really bothered. So they are hoping, obviously, that America stops their drilling and starts to import oil again.
Yeah.
At the same time, America is cutting down, but not enough to push the prices up again.
Yeah. Okay, thank you very much.
No problem.
Now, looking at the week ahead, we've got the Office of National Statistics is coming out with the UK current account figures on Wednesday. There's also the Purchasing Managers Index in China on Wednesday, and on Friday we're seeing some more figures from the US, I think, around employment. So, looking at the week's news, taking it sort of macro level, what does this? How might this affect things? For example, with the Federal Reserve.
Well, Wednesday and Friday are going to be very interesting to see what the Federal Bank is going to do, just to see if China's development is still on a low or they're actually going somewhere. At the same time, they want to see what their unemployment rate is going to be like, if they are getting lower as well, so they might just push on and use October, when they have their next meet, actually to change the rates. Whereas if China does really bad, then they might actually not do it in October and then push it forward to December probably.
Yeah. Okay.
Now, let's see, regarding Wednesday when it comes to the UK, whatever turns out, if you see that there's more money spent in the country, so basically meaning that foreign investors spending more money in the UK, which means the pound might rise and become stronger compared to the euro or the dollar.
Great. Rakesh, thank you very much.
My pleasure.
Thanks for joining us for ActivTrades News. We'll see you next week for an update on the economy and market conditions.